Alright. Yeah, baby. Alright, anyhow. So, it is. Alright. We're going to do Market Mondays, Watchlist Wednesdays, Freestyle Fridays, alright? So, here's Freestyle Friday. Alright. Me throwing up the deuces. Alright, so just to break down today, alright, jobs report did come in. They're having a huge argument over that right now. Trump thinks that they're trying to do him dirty. You know, I'm not going to put my opinion on that. You know, I mean, I'm staying neutral on everything. But so anyhow, job numbers came in. I'm not worried about it because I talked to somebody who works at the GM plant in Fort Wayne, and they're hiring like crazy right now. They're hiring like crazy. They're shutting down the Mexico plants, and they're building a whole new plant up in Fort Wayne. And that's just one company. So there's multiple companies about to do this, or they're already doing this. So I'm not too worried about this little bit of volatility. And but anyhow, though, so I'm just that's why we had a red day today. It was already red before that reported, but that just made it worse. And so anyhow, the market needed a little breather. Anyhow, it had been running up quite a bit, so it was just an excuse for them to pull back, really. Um, Now, if the numbers keep happening, so if next month's numbers come in and it's bad again, then we'll look at that a little deeper. We'll dig a little deeper and maybe take some precautions. Okay, but as of right now, I think we're still good to go. And then interest rates are coming down, and Rocket Mortgage had earnings, and they knocked earnings out the park, which is a good sign that the housing market might be starting to turn around a little bit. And so we want to keep our eye on that because we buy when things are down, right? We buy when they're down, and we sell when they're high, right? That's the goal, right? It sounds so simple. It sounds so simple, guys, but you would not believe how many people can't follow that rule, okay? Because they get scared. All right, they get scared when the market's going down. They get scared and they're like, oh no, and they end up selling, and then they sell down here at the bottom, and then they want to get back in. Oh, the market's doing great. I want in on this. So then they get in the last minute. You see what I'm saying? It's just you got to almost reverse psychology that shit, okay? So you almost have to think the opposite. So when the market's doing really good, it's not the time to get in. Okay, it's time to sit still, sit on your hands. Okay, and for the buy and hold. And then I'm on a brain fart, but anyhow, when it's low, it's time to buy. Right? When it's low, it's time to buy. Okay, so yeah. All right, all right, all right, all right, all right, all right. I'll tell you what. All right. So here's our stocks, guys. Here's our stocks. Um, so Palo Alto, I added to that a little more. Um, if I had more money in there, I'd add to it again. Adobe, I'm having second thoughts on Adobe, and the reason why is I didn't catch this before, but so Adobe's growth rates actually slowed down. All right, so if you look at like the last 10 years, 10 years ago it was growing at like 20%, 15, 20%, and now it's been starting to slow down these last several years. I think it'll pick back up due to AI, but I that's just a hunch. I don't really have any hard evidence on that. And so instead of waiting, like we don't want to play the waiting game. We want companies that are already growing, that we know they're going to grow fast, right? So I might switch Adobe out for something else like VRT or something, or maybe App 11 or something. So we'll see. We'll see. Tesla, we're gonna go over Tesla and SoFi. That's fintech, it's financials, but it's also small cap. So I think I'm just gonna have SoFi count as our small cap company. And then as a financial company, we're going to go with Visa or JP Morgan. T-Mobile, I feel good with T-Mobile. It's a good company. I have T-Mobile. I hate them, but as far as the company goes, they're a good company. And they're also partnered with Starlink too, which they're going to really benefit from that. All right, now we got Toll Brothers. I wanted to get in housing because it was so down. It was like too good to pass up, right? So, um, so we got in housing, so we got that covered. We got in good because housing's been trash here lately, and for good reason. Nobody wants to buy a home when you're paying double, for what you would have paid 4 years ago, 5 years ago. So, but that it is, interest rates are coming down, and home builders are just building like crazy to try to get more houses on the market. Okay. Um, Elf Beauty, I feel good about them. They really got hit hard because of the tariffs. Other than that, though, fundamentally they're straight. They're really good. And then good old Google. Google was at a really good level for us to get in, so we picked some up. And so yeah, I think our portfolio is looking really good. Now here's what I'm thinking, guys. This is my thinking process as far as the public account goes for the public or for the public account for the buy and hold portfolio. So we got stocks that I'm wanting to add. We need a defense company, okay? I've been waiting on the HWM to pull back. They pulled back a little bit. We're gonna go over that. And if we don't pick up HWM, we might get GE. That's a really good company, and they do defense and commercial. So if we go with GE, we'll get a little bit of both. We need a nuclear company. We need a nuclear company, guys. I'm telling you. Nuclear is where we want to be. These next 4 years, nuclear. I'm telling you, you're going to see nuclear it have growth like it's never had before, ever. Okay, like we are really going to start investing in nuclear. Okay, and this is the beginning stages of it. So we don't even know who the clear winners are yet. We know VST has contracts with hyperscalers. We know Talon has contracts with the hyperscalers, and we know Constellation Energy has contracts with the hyperscalers. So those three, everybody's already tracking, and we're tracking them too. And they're three really good companies. But there's a couple companies that a lot of people aren't tracking, but they've already signed deals with Trump and then the government, and so I know they're going to benefit. And that's Oklo and NewScale. NewScale's ticker symbol is SMR, and they're if you look them up on their books, they look like shit. They do. They look like horrible. I think the only thing Oklo does have going for itself is they have more cash on the side than they have debt. But other than that, like if you were researching these companies and you didn't know that they had we were heading towards nuclear and all that, you wouldn't touch these stocks, guys. So we're kind of going against the grain on that one. Um, so maybe what I'll do is I'll add one of these ones, these smaller ones like Oklo or New Scale, and then we'll add like a Talon or a VST or Constellation Energy. Okay, so we'll get one of the big dogs and then we'll get one of the smaller ones. And financials. So like I said, SoFi is a financial company, but it's also small cap. So I think for a small cap category to check that one off the box, we're gonna go with SoFi. Um, and then they're already doing great. I mean, they're killing it. They've been killing it. If you don't know who SoFi is, go check them out. I've already gotten a loan through them once already. It's a great company. You can get loans through them. You can get crypto through them. You can get stocks through them. You can even invest in private companies that haven't IPO'd yet, which is killer. Because that's hard to do for people like us. All right, you have to be like an angel investor. You have to have like anywhere from 20,000 to 100,000 to even get in the room to invest with these guys. So yeah, so that's that. But for financial companies, as far as that goes, I really like Visa and I really like JP Morgan. Okay, those two are the best of the best. Okay, a lot of people will argue that MasterCard, or not MasterCard, um, uh, American Express is better than Visa. That's arguable. I don't believe that, because American Express isn't doing fintech the way Visa is doing it, and that's really going to capture the younger generation. Um, but if you're looking at like just straight credit card perks and stuff, American Express is better. It's more for like the higher clientele. But and it's a personal opinion. I just think Visa is better. But if you compare them side by side, they're both pretty equal on paper. And then J.P. Morgan, big dog, J.P. Morgan Chase. I mean, it's the best bank in the world, honestly. So I don't have J.P. Morgan as a bank. I wish I did though. But yeah, J.P. Morgan, and then Jamie Dimon is the CEO of J.P. Morgan, and he's like one of the best CEOs there is. He is leaving though, so that kind of sucks. But he's retiring. He's not leaving. But anyhow, I want to get at least two more tech, and if we take out Adobe, then that'll be three techs that we're getting. So I want NVIDIA or AMD. I don't want both of them, but I want either or. And then I definitely want Meta. Meta is super pricey, so that's going to hurt our small little account. Um, but if I can pull it off, I think it's worth it. Sorry, I got like this nicotine gum in my, not gum, but patch, because I quit vaping. So anyhow, and then VRT. VRT builds data centers. Okay. Um, so I guess technically they're not really tech. They're more like they're almost like industrial. But anyhow, what they're doing, they build data centers for the tech companies, and and I think they're like the best at it. So and they're doing really good. But you'll notice like anytime Nvidia or AMD, especially Nvidia, if it goes up, VRT goes up. If Nvidia goes down, VRT goes down. You'll see how like there's really like the VRT is super correlated with tech. So if like tech's down, VRT will be down. Um, and then we need to get a healthcare company in there. Nova and Lilly, like they they missed the ball on this. They had the best drug out these last couple years, and somehow they messed it up. They messed it up. They should have been killing earnings. These companies should have been knocking, and they were Lilly was knocking it out of the park for a while. Um, but anyhow, payment method or something like that got messed up, and then there's like a bunch of counterfeit drugs out there that's messing up the supply chain too. So, um, so we'll see though. Nova's a lot cheaper than Lilly, and I think they'll still, they'll still pull something off. So. And this Nova Nordist is out of Amsterdam, and Lilly is actually out of Indianapolis, here in Indiana, which where I'm at. And then this is Vertex. Vertex is a great company. They have a lot of good drugs in the pipeline. So we're going to pick up one of these three. Probably not Lilly, just because it's so expensive. And if I add Meta and Lilly, that's just going to be so much of our portfolio. Um, so I can really work a lot more with the other ones. So anyhow, Amazon, Amazon, it's everything, man. It's data, data centers. It's shopping. It's healthcare. I mean, they sell prescriptions off of Amazon. They got like a whole bunch of stuff in the mix. So it's almost like Amazon's like a must. Like you have to have Amazon. You know what I mean? It's they're just, and they just beat earnings. They knocked it out of the park. They did some weak guidance, and Amazon's known for doing that on purpose, right? They'll do weak guidance on purpose. That way, they can have a surprise next earnings, right? And a lot of CEOs do that. their guidance will be, it'll be hesitant, and then they just let the numbers, prove themselves. Other companies, they hype it up though. Like if you get like the CEO of Lisa Su, the CEO of AMD, and the CEO of Nvidia, Jensen Huang, they hype their companies up like crazy. So it really just depends. All right, this is Visa, and if you see right here, this is the 200-day moving average, and they're about to bounce off of it. All right, so Visa's a buy right now, guys. It's a buy if you're doing options, and it's a buy if you're doing a buy and hold. Either one. Right now, it's a buy. I would wait for the bounce right here. So I would wait for the first or second green candle. This is a 1 year, 1 day chart. So remember, each one of these candles is a day. So, as soon as I get that green right here, then I'm gonna jump in. This is Amazon. So this gap down right here, this is what they call a gap down, and this right here is a gap up. Okay, that's what they call these. So all this empty space right here. Okay, that's why they call it a gap down or gap up. And then, but anyhow, this is all because of guidance. All right, so this was earnings yesterday, and they beat earnings. This is why I don't play earnings, guys. I don't do earnings because you can have a company knock earnings out the park and it still go down, and it makes no sense to me. So, or you can have a company do horrible like Tesla, and they go up. It makes no sense. So I don't play earnings, guys. I won't jump in a company right before earnings. I won't do it, and I advise you not to either. All right. But some people gotta learn the hard way. If you're anything like me, I was taught that, and I still end up doing it anyhow a few times, and I learned why right away. So anyhow, though, so this is the 50-day, and then this is the 100-day, and this is the 200-day. Okay, so. Yeah, I think everything's looking good. All this crossover right here from this dip it's all good bullish signals right here, and I don't imagine it's going to stay down here long. Okay, next week might be a little volatile because of the job report still, so don't be surprised if next week if we see a lot of red next week. But it is what it is. I'm not too worried about it. I don't think it's the pullback that I've been talking about because it's still early. It usually doesn't. It does happen in August sometimes, but I don't think it's going to happen in August this year. I think it's going to wait until September or October. So this is a little breather we're going through right now. No biggie. Then this is HWM. Okay, this is a defense company that I really like. They do unmanned aircraft. They do drones and planes and all kinds of stuff. So, as you can tell, as you can see on the 1 year chart, they don't pull back that. Even the big dip that we just had, not was that 5-6 months ago? It didn't even go down that much. So, and then you can just see like you did. Look, each one of these is a month. So 1, 2, 3. So so in the last 3.5 months, it's only given you a couple times that's pulled back. So this pullback here where it came and touched the 50-day, I think that's almost good enough for us to get in. So come Monday, we might pick some up. And then another thing is, damn, my dog keeps farting and he's laying right below me. Dang, bro, he stinks. Anyhow, I'm dying over here. Who's this? Oh, okay. And then Tesla. All right. Good old Tesla.
Mom's not home?
No, mommy's not home, baby. All right. This one, on earnings, we knew they weren't going to do good on earnings. Okay, so that's not a big deal. What we're counting on is Optimus, the in-home robot that people are going to be able to order for 20 to 25 grand, and then the robo taxi, which that's already happening right now. Okay, so I think they just started up in California. They've been doing it in Austin, Texas for the last few weeks, and Elon, he says we're on track to be in almost every state next year, so, or at least half the states next year. So, and then once Optimus comes out, I really think these numbers are going to really start to turn around, and they're going to turn around fast, especially when Optimus comes out. So, if we can just keep Elon out of the political bullshit and keep him focused on his companies, I think we'll be all right. So here's what we're doing when we're looking for a company real quick. Okay, let's just go over what we do. Okay, so this is Oklo. Okay, this is a company we're thinking about getting. Now, if we didn't know about the nuclear deals that they had going on with the government and everything, what Oklo does is they build small nuclear reactors, little mini reactors, okay, that they can pop up right beside somebody's factory, somebody's data center, okay, and it can supply them with enough power so they're not pulling from our grid, all right? And this is like a new thing, okay? It's almost like you're betting on its future potential, okay? You're not betting on what it's doing right now, because what it's doing right now is shit, okay? And how do we know it's shit? Well, let's go down here. Okay. So here's earnings, okay? So miss, beat, and then this is the one coming up. Okay, so they've been missing on earnings like crazy. All right, and when they're down and not up, when these here are down and not up here, that means that they're still in the red. They're in the negative. They haven't turned profit at all yet. Okay. So this is I'm surprised. So this is forward looking. So 2026, their earnings per share look like they're not going to do good next year. I don't believe that. We'll see. It depends on how fast they get up and running. If they don't get up and running next year, then it will look like that. But if they do get up and running and some hyperscalers start using them, which I think that's what's going to happen, and we know the defense is going to start using them, I think these numbers will change drastically. Okay. That price to book right here, that's way too high. That's way too high. You see the return on equity, negative 56, return on asset, negative 19. Like that's a no-no, guys. Like we wouldn't even think about this company on a normal circumstance. Market cap, they do have a lot more cash than debt, which is, like I said, it's the only thing they really have going for themselves. And so like just seeing like this right here, I wouldn't even dig any deeper normally. Like I wouldn't even go up here to financials and start breaking down the income statement and all that, okay? But like, let's look up a good company that's also nuclear. The LBRT, they're gonna probably do good too, but their stuff looks like shit right now too. So let's do let's do Constellation Energy. All right, Constellation Energy. Yeah, okay. See how it doesn't have the parentheses around it? It's because they're turning a profit. All right, that's what I thought it was. All right, so yeah, so Oklo is just looking really bad right now. It's looking really bad right now. So you're really just betting on its potential if we get in it. All right, and that could pay off like that. People, that's really what this whole game's about. Is you're betting on the future of the company, right? So yeah, so you're betting on the future of the company, right? But we want the numbers to look good already, though, right? And then it just happens to be in this case that they just don't. So you're really dependent on the future. But the good thing is, like on Oklo, everybody knows what I know, right? Like, or at least all the big dogs, all like the real hardcore investors with big money, they they know like what the future's heading, where we're heading in the future with nuclear, and they know what companies are going to benefit. So, uh, look at this analyst here. It says the most exciting zero revenue stock, like price for very strong execution, not enough upside. It's a sell, strong sell. Improved outlook as Trump accelerates small modular reactor development timeline. So, like all these guys right here that are saying sell, like you can't blame them for saying that. You know what I mean? Because on paper, the company looks like shit. Yeah, like see, no revenue, no problem. The story gets stronger. Rating upgrade. And he's saying that because he sees the future, and we know they have a bunch of contracts. Like Trump came and publicly announced like several contracts with these companies. So it's like we know they have stuff in the pipeline. Um, and then like, but let's go back to Constellation Energy. So if we go back to Constellation Energy, you'll see. I'm about to let you guys go because my house is starting to get full. So, but anyhow, as you can see, they beat, broke even, beat. Looks like they missed the last one, which is crazy. But for the most part, they're beating. The price to book is 8. That's decent. That's decent. You don't want price to book to be extremely high. Return on equity 23. We want over 20. Return on assets over 5. We want over 5. Market cap 109 billion. Total debt 8 billion. Cash. So they have a little too much debt, more debt than cash, but what is it? Not right this second. I'm not. Okay. No. I'll be down there in a minute. You guys taking the golf cart? Anyhow, so this is what we do, guys. This is how we research companies. This is what we do. Okay, this is how we determine whether it's a good company. So you should be able to call out, what's going on in the company, and the good stuff and the bad stuff, right? So like Constellation Energy, it's a great company. Okay, guys, it's a great company, but if you're looking at the capital structure here, it's worrisome. Okay, it's worrisome. If we go into a recession or something, that's $8 billion that they have in bills that they got to pay, and they only have less than 2 billion to work with. So, uh, that could cause trouble later on down the road, if we hit hard times. So, but this right here, these numbers here, they look really good. Not really good, but these are decent. These are decent numbers. All right, this means they're growing. You know what I mean? Like they're turning a pretty good profit. They're growing. Price to book ain't horrible. It ain't no value investing. If it was value investing, we'd be looking under 3 is what you want for value investing. But it's still good. It's still a good number. These earnings projections right here. So 2026, they're estimating that it's going to grow 18%. So far this year, it's only grown 8%. So looks like next year's looking pretty good if that comes true. All right. And then if you wanted to break it down further, you would go up here. I like to read what people are saying about the company. And you can read like what contracts they're getting. Just like if you click on this stuff and you read it, guys, it'll tell you a lot. It'll tell you like what's going on. Not a lot in that one. Anyhow, so we'll go over to financials, and you can just see. So at 18, this is in 2018, right? So 18 billion to 20 billion. 20 billion they lost. revenue. Wonder why they lost revenue back then. It doesn't really matter, but it doesn't matter now because it's in the past. But so 17 to 19, so then it went up 2.5 billion or 2 billion, almost 2 billion even, and then look, it went from 19 to 24, so they made a lot that year. They did really good, and then 24 to 24, they didn't make no money that year, and they lost money again. So that could be because they are, they might have like a lot of construction going on, or they're trying to, maybe they know these last few years they've known that we're going to go to nuclear, so they've really been investing in themselves. That might have something to do with it. You could figure that out if you dug a little deeper. Net income, that's the bottom line. That's the one that matters. That's the one that matters the most. And yeah, just same old, same old. All right, I'm gonna cut a lot of this shit out. Anyhow, yeah, that's it. That's what's going on. Okay, so don't be surprised. Monday, it's a red day. And Monday, Tuesday, Wednesday might also be red. They'll probably pick back up towards later on in the week. These are just opinions of mine. All right, these aren't guarantees. We will be going over options here soon. If you haven't got your feet wet because you're scared and you don't want to invest into a singular company, guys, you can do ETF. ETFs are exchange traded funds is what ETF stands for, and what it is it's a bunch of companies acting as one stock. Okay, so like if you do SPY, the SPY, that's the S&P 500, and so you're basically betting on the whole S&P 500. Okay, if you do QQQ, that's all the heavy, big time tech stocks, and then there's another one though that I like. So if you is called Granny Shot by Tom Lee, a big tech investor, really knows his stuff, really good. So anyhow, if you don't want to do individual stocks and you just want to get your feet wet, I advise to do an ETF, and I would choose one of those three or all of them. So that's SPY, QQQ for your tech, and then your Granny Shot for Tom Lee, and that one's basically all fast growers. That's all he concentrates on. It's all fast growers, mostly tech, but it's got a bunch of really good companies in it. And so if you don't want to break down a bunch of companies individually, you could do ETFs, and they're a little safer, and you can still have a lot of good. You can see a lot of good profit and gains with those. So, but anyhow, that's it. That's the Freestyle Friday, guys. All right. So love y'all, and I will see y'all Monday. Peace out.